Preparation of manufacturing trading profit or loss account. You know, I said it earlier that I'm going to talk about the preparation of manufacturing trading profit or loss account, right? Let me now go into the preparation for it. Certainly, the preparation of manufacturing trading profit or loss accounts involves several steps and kind of calculations. And I'm going to outline the process and provide examples and calculations involved. So the first one is a manufacturing account. The manufacturing account summarizes the cost of producing goods during a specific accounting period. It is typically prepared by manufacturers to complete the cost of goods manufactured, I mean the COGM. So the key components of manufacturing account, we have the first one, opening stock of raw materials. When we are talking about the opening stock of raw materials, this is the value of raw materials at the beginning of an accounting period. Another one under it is purchases of raw materials. Purchases of raw materials is the cost of raw materials purchased during the accounting period. Another point under it, which is the third point, is also direct labor cost. The total cost of labor directly involved in the manufacturing process is what this one entails. The fourth one under it is direct expenses. Other direct manufacturing costs such as factory rent and utilities is what this one entails. The fifth one under it is also closing stock of raw materials, closing stock of RM. The values of raw materials remaining at the end of the accounting period is what this one entails. So let's now talk of the sixth one, which is factory overhead. So factory overhead is indirect manufacturing costs such as depreciation, factory supplies, and maintenance. So let's now talk about the calculation of cost of goods manufactured. So I'm going to use the acronym for it, COGM. So COGM formula is given as opening stock of raw materials plus purchases plus direct labor plus direct expenses plus factory overhead minus closing stock of raw materials. The second one is the trading account. The trading account shows the gross profit earned by business through buying and selling goods. It's an intermediary account used in the preparation of the profit or loss account. Let's now talk about the key components under trading account. The first component is opening stock of finished goods. When we are talking about the opening stock of finished goods, this is termed as the value of finished goods at the beginning of the accounting period. The second key component under it is purchases. The cost of buying additional goods for sale is what purchases entails. The third key component under it is also direct expenses. Any direct expenses related to purchase of goods such as transportation costs is what this one is talking about. Another key point under it is closing stock of finished goods. The value of finished goods remaining at the end of the accounting period. Calculation for gross profit is opening stock of finished goods plus purchases plus direct expenses minus closing stock of the finished goods. The third account is the profit or loss account or profit and loss account. The profit or loss account or income statement, it summarizes a company's revenues and expenses for a specific period, resulting in either a net profit or kind of net loss. Also, I'm going to talk about the key components of profit or loss account for this one too, as I used to say for the others. The first component under it is sales revenue. The total revenue generated from selling goods is a kind of sales revenue. The second component is gross profit. This gross profit is calculated from the trading account. Another component is also operating expenses. Operating expenses are costs associated with running the businesses such as salaries, rent, utilities, and marketing expenses. Another key component under it is other income. This is a non-operating income such as interest income or rental income. So other expenses is another key component under it, which talks on non-operating expenses such as interest expenses or legal fees. Another component under it is also income tax. This talks about the income tax expense for a kind of particular period. Another component under it is net profit or loss. This is the result after subtracting all expenses and taxes from the gross profit that was gotten. So Let's now move to calculation of the net profit I said now, or net loss. Net profit is given as gross profit plus other income minus operating expenses plus other expenses plus income tax. So in summary, the manufacturing account helps to calculate the cost of goods manufactured, COGM. The trading account calculates the gross profit, and the profit or loss account summarizes the net profit or loss after considering all revenues and expenses. All these accounts are essential for understanding the financial performance of a business. So guys, I hope you've gained more on manufacturing accounts. Thank you guys for watching. Remember to subscribe to LearnCity.